ABSL GenNext fund is a consumption-based thematic fund. If you see India as a population, 65% of Indian population is less than 35 years of age. And if you see the financial saving of the country vis-a-vis other emerging and developed market, we have very high financial savers and we have very low leverage. The fund tends to identify the theme where next generation of consumers will go and spend, be it a retail, be it QSR, be it the malls, or be it the theater. And fund tends to identify where this next generation will go and spend and tries to capture and identify those stocks. We just don't invest in consumer story, we also invest in financial services, real estate, banking, auto. Wherever next generation of consumers will go and spend, we tend to invest in those story. And to tell you a perspective, these are more structural stories to own, because as I started off the discussion with India, 65% of population, remember, that is less than 35 years of age. We're just starting to improve our per capita income, and as people earn a lot, they'll spend in these categories which I tend to identify and invest in. So consumer theme is a big theme which will play out, but consumer of today is different from consumers of the past. Consumer of today are more tech savvy, more experiential, and they want to try, and they are very open to try things, and even if it's even if the things are not working out, they don't mind trying it out. So some of the consumption trend will be across various generations, but a lot of themes evolve and play out. So the fund tries to identify themes which will evolve, and before market or participants start playing that thing, fund tries to be ahead of the curve and invest in those, and then benefit when the market participants are able to try and capture that. The idea to invest in this fund should be a 3 to 5 year perspective, where you should keep on continuously investing in this and benefit out of the great India story. India, if I look at consumer durable penetration in India, it's very low. I'll be surprised if you notice the AC penetration in India is less than 10%. The washing machine penetration in India is less than 20%. I think consumer durable is a big theme which will evolve in India. As urbanization improves, as electricity penetration improves, I think consumer durable is a big trend in the country which is going to play out. The second big trend in the country, as I have said, is that India population, 65% of people less than 35 years of age. The India people want convenience. They want to have food on the go. And with this kind of population, I'm surprised that in India there are just 2 QSR with more than 1,000 stores. So I think quick service restaurant in India will evolve big time, organized quick service restaurant. And that's the second big trend which I can think about. The third big trend I think which will play out in India is the organized retail. Till now, organized retail is less than 15% in India. By organized retail, I mean the places in a mall or places in an organized store where you go and buy. Globally, the organized retail penetration is anywhere between 30 or 40%. I think someone who is able to capture this organized retail theme or organized retail in India will be a big beneficiary from a next 3 to 5 year perspective. So ABSL India GenNext Fund tend to invest in all the B2C businesses in India. By B2C businesses, we mean FMCG, retail, auto, banking and financial services, real estate in terms of malls or cinema theater. Those are the mandates. All the B2C businesses we can invest in. We avoid all the B2B businesses. Now, being a thematic fund, also we are relatively more position in terms of retail. We have a big allocation in terms of retail sector. Within retail also, we like QSR and footwear retail. We have a decent allocation. We have a decent allocation to a mall business. We also relatively have a decent allocation to banking and financial services. Within the banking, I think the insurance business is just evolving in India. That's a big space where we have allocation to. Even banking, I think most of the private banks are coming up from a place where things can, from next 3 to 5 years, can be very good in terms of growth, in terms of margin. So we have a decent allocation to banking space also. This fund is different from a diversified equity fund in perspective that we don't have B2B businesses. So I can't invest in a metal or an infrastructure name or even a tech name, which is more B2B business. But the best part of the fund is that if you see over longer term, the fund has a lower drawdown versus most of the diversified fund, and fund tends to participate in the upside by having some beta in the upside in the consumer businesses. So funds tend to be very early to identify new evolving sector and participates in the upside more than the diversified fund, and fund has a lower drawdown in terms of the standard deviation of the fund. If I see over longer term, is lower than the diversified fund. Yeah, over the last 5-7 years when I've been managing this fund, firstly along with Anil and then individually, what we have done in this fund is that we have been able to identify themes early and capture those themes, and that is where the fund has benefited. Idea is to keep learning and identifying where the next generation of Indian consumers will go and spend, and be early to have that in the fund and participates in the upside. As a analyst or as a fund manager, we continuously keep looking at themes and keep an eye on where the consumer of next will go and spend. How they're evolving in terms of tech, how they're evolving in terms of consumption habit, how they're evolving in terms of the family. Because if I see a few years back, the nuclearization as a theme is playing out, and I think that's a big theme which will play out in the country. Urbanization as a theme is playing out. I think people want to come to urban location. That as a theme will play out in this country. Penetration continuously plays out. So all these are big themes which are playing out, and within this macro theme there are a lot of micro themes which plays out. So in the journey we tend to look at themes, identify theme, capture it early and play on the upside. I think anyone coming to investment in mutual fund for the first time should look at investing in consumption theme. And the reason I passionately talk about is that consumption story, most of the good consumer companies are good cash flow throwing businesses. And if they are throwing cash flow decently, that means they are trying to create moat for the business for longer term, where they can invest and keep on innovating in the company and being successful over the longer term. So anyone who is coming in the mutual fund should first start their SIP from a consumption thing, and within the consumption thing, I think Aditya Birla Sun Life GenNext fund participate in the consumer story. We tend to identify trend early. We also participate in the banking and financial services, because those are the themes which will evolve in India, and we tend to capture that early. Over longer term, this fund will do well. And the best part, the reason I'm saying that a new investor should come here, because the standard deviation of this fund is lower, the volatility of this fund is lower versus other diversified fund, and fund captures the upside also when the market plays it. So you tend to draw down lower and get a participation in the upside, and that's the reason anyone coming new should invest in this fund and should continuously have a SIP in this fund for a longer term. Anyone who comes and asks me how much your allocation should be to Aditya Birla Sun Life GenNext fund, I always advise them it should be in the range of 30 to 40%. That's also because I am very passionate about this fund. But to tell you what the ideal allocation should be, if assume that you are allocating 30 or 40% to thematic fund, 50% of that should be to ABSL GenNext fund, because the fund will participate in the upside with lower volatility. We have done it in the past, we'll try and do it in the future also. The way Aditya Birla Sun Life GenNext fund is managed is we'll tend to look at bottom of stock idea, and we tend to find out success over next generation. We tend to identify companies early and tend to invest in those companies. We do have a look at the benchmark, but we normally invest in, the fund is sector agnostic. Fund can invest in large cap, mid cap, small cap. The other way, from a benchmark, we deviate from the benchmark, but we have a bottom up stock selection idea. The idea is to beat the benchmark over longer term, still look at which are the stocks in the benchmark and look at success story and invest in those stories. We do bottom up stock idea, we look at longer term trend, longer term industry which will evolve and invest in those. Decide to sell a consumer story is always difficult, but I give a lot of importance to the performance of the company over longer term. If the company's performance is deteriorating for first, second, third quarter continuously, then I question why is it? Either is it a structural problem or is it a problem which is of passing phase? If I feel that it's a structural problem, after the third quarter I critically evaluate the company position, either the management or the category or something has gone wrong, and then I critically evaluate, and if I feel, I decide to sell the stock. I never decide to sell the stock based on valuation. If it's a good story from a longer term, I decide to hold on to the name unless the valuation really becomes very, very frothy and it's difficult to justify it. That's the only time when I decide to exit the stock. The idea is that we tend to find good businesses and own those businesses for longer term unless the business fundamental deteriorates or valuation become very, very, very frothy. That's the time I decide to, that's the second time I decide to sell the stock. The third time, probably if the industry is evolving and I see the consumer trend evolving and the company is not able to identify that trend, then for sure I'll get out of this business, because a lot of businesses which were there in the past may not be the business of the future. The business of the future are going to be tech savvy, where consumer GenNext will go and spend, and if the company is not evolving themselves, I decide to exit those stocks. So the way fund decide to select the stock in a portfolio, we look at businesses and which are the good businesses from a longer term. I give a lot of importance to business and then come the valuation. I think from a business perspective, if the business is good and evolving, if the business captures the future trend, I try and look at those story and invest in those. The other thing is that we look at both top down and bottom up. From a top down, we look at story and trend which will evolve, the story and trend which will be successful from next 3 to 5 years. Within that, we look at stocks of business which I need to own. Within the right industry, I try and pick up the company which will try and have the strong moat and then invest in those companies. I give a lot of importance to governance. Any red flag in any of the company is a no-no, even if it's very cheap. A lot of importance is given to the cash flow generating capability of the company. If the company is growing strongly but not generating a cash flow, again it's a no-no for my portfolio. I give a lot of importance to governance, a lot of importance to businesses, a lot of importance to cash flow and the return ratios, and that's where I tend to invest in those stocks.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.